Welcome to our session on patterns in payments. My name's Steve Vanstone. I'm with Intellect Design here in Canada, and I'm responsible for our sales and relationship management across retail, commercial, corporate banking, treasury, and insurance for a number of clients in Canada. Been with Intellect now for about 5 years. Just a housekeeping item that I'd like to start with. Please, if you're interested in asking a question, click on the Ask the Speaker button, and you can also upvote your favorite. I guess this is day 3 of the summit, so most people probably know how to work this now. But if you've been waiting to join the summit just to hear from our panel, I wanted to let you know that. You can also click on Join the Conversation to text chat with your other attendees, and then, of course, your mic and video is disabled. So I'd like Bala and Peter to introduce themselves, and then we'll get into the meat of the session.
Sure. Thank you, Steve. Good afternoon to everyone. I'm Bala from Intellect Design. I've been a banker, I've been a solution provider, I've been a management consultant for over 27 years. Based out of Dallas, Texas, responsible for solution consulting in all of the Americas. So pleasure to be on this panel today. Peter.
Great. Yes, Peter Hazou from Microsoft. I'm on the industry team for financial services, and I'm responsible for our corporate and commercial banking vertical within our banking industry team. And I'm also responsible most directly for payments, core banking, and trade finance as far as solutions for our clients. I'm a career banker by way of background, and I've run the transaction banking business at a number of major banks, HSBC, Citi, and a couple of others.
Great. Thanks, Bala and Peter. So as billed, our topic is patterns in payments, embedded, contextual, and real world. So we'll work through that and through the subpoints that we had on the little advert for the session here. So starting off, and maybe Peter, I'd ask you to be the first to respond. Let's explore your views on how payments offerings can fit more fully into the overall working capital management processes of businesses. How can banks and other FIs enable better working capital management with new and innovative payments offerings?
Right. So it's no question that payments is going through a revolution in many respects, a revolution in the fintech industry, a revolution in the banking industry. It's really a very interesting time, and the role of payments is changing. It's changing a lot, and it has a very direct impact, particularly on working capital. But we know it in our lives on the retail side in terms of e-commerce and COVID. But actually, the area that's very, very interesting is really on working capital in the B2B space. It affects banks and transaction banking. But why I say that is I think there's a broader view around what payments can do and the value that they can bring. Traditionally, payments it's a huge industry. It's an annuity income for banks, no question. It's a big part of all of our careers. But if you think more broadly about the data, not just payments as a widget that banks process for a fee, but the insights contained therein, and how much value that could bring to the corporate clients as a product as well. And it's really about the insights. And so that affects supply chain finance. Of course, supply chain is hugely, hugely interesting. Look at the world around us and the changes going on in globalization, in supply chains. We see during COVID, everything piling up at ports. All that's got to be financed. All of that, everything's got to be paid for. There's delays. So it's really an interesting area. But by using analytics, predictive analytics, something like cash flow forecasting, an enormous space, very important to banks, and it's not really been leveraged as much as other areas of cash management. So it's not a matter of just providing information. It's really about the insights. And that's I think a basic way that payments are changing their role enormously. So a lot of use cases come from that high-level description. Oh, you're muted. You muted. Okay. Steven, you've gone on mute.
3 times. User error.
Okay.
Bala, yeah. Thanks, Peter. Bala, over to you.
Yeah. So interesting question, right? Working capital payments. See, the one interesting thing is the way I look at it is payments has always been and will always be the backbone of everything that we do from a financial services and banking perspective. So what Peter said, and Peter, I like the part where he said, insights and knowledge. Trends like ISO 222, for example, are creating this great opportunity for banks to actually look beyond that whole payment box and look at what the customer is trying to do. And that's very interesting, the metadata that comes with processing ISO information. We think a lot of banks trying to use this information in a smart way. They're just starting to do that. And one of them is tying that closely to cash flow forecasting, like Peter mentioned, and using that to figure out what could be the possible art of what I could give to that customer at some point in time. In fact, in one of the earlier Payment Canada forums, I used the term shift left, which actually resonates very well in this context. So banks have always been executors. So they've been at a certain point where they pick up a payment, process it, and go to the next payment, right? So with shift left essentially talks about moving one step back to figure out why the payment is happening or what is the purpose behind the payment, how can the bank insert itself into that life cycle. And one of the biggest elements there is working capital management, all the more emphasized in today's post-COVID scenario. I call it post-COVID, but yeah, I mean, I'm hopefully optimistic of where we are. So we should be good there. So working capital is going to have a very, very vital role to play, and payment processing is going to be an underlying backbone there.
Stephen, can I add just a couple of comments at the end of that before we move on to the next question? For heaven's sakes, ISO is not a compliance project. It's a big opportunity. It's about
Absolutely.
Data is the core of payments. The fintech industry has really figured this out. It's really about the data. And the banking business model of taking deposits and making loans is really changing. It's really about the third way. It's really about data and data insights. So super.
Totally agree. Yeah.
Yeah. So moving on, our session title referred to embedded payments.
Mm-hmm.
And maybe I'll throw this to Bala first. Bala, could you go over your view of the concept of embedded payments and how it can add value both to banks and to the bank's clients?
Sure.
In the payment business.
Yeah. Steve, see, I think it's very intriguing to observe how this topic of embedded payments, which is a catalyst in enabling what banks are now calling as banking as a service in the broader sense, has created a significant paradigm shift in North America today. I can confidently say that in the last 4 to 6 months, not a single day has gone by without me using this terminology in any of my client partner meetings. Now, as we already know, in the traditional models for quite a while, banks have been providing self-service capabilities for their payment product by using their own digital solutions, either homegrown or vendor deployed. This is completely morphing into the more recent trend of exposing the same digital capabilities through an API-powered ecosystem that can be consumed by the bank client into literally any application of their choice, hence the term, embedded payment. If you were to take an example, on one side you have someone like an Uber or a Lyft, who have completely revolutionized the ability to initiate in-app payments by enabling a direct connection to the banks that execute the underlying payment. On the other side, you also have large marketplace and ecosystem players like you got your Amazon, Facebook, Apple, PayPal, who are providing alternate payment mechanisms, digital wallets, while at the same time extending to an amazing cross-selling opportunity for things like, point-of-sale lending, working capital financing, even buy now, pay later models that are very, very appealing to the digital customers of today. There's one question on everyone's mind, though. I mean, to quote a line from Jerry Maguire, the statement is, "Show me the money," right? So I recently read a Forbes article on this, very interesting, just published a couple of days back. It stated that out of the broader opportunity for embedded finance, which, by the way, is projected to hit, I think, $230 billion in revenue by 2026. About 61% of that is $40.8 billion, has been projected to come out of just embedded payment. So the payment processing being embedded in the lifecycle of the client's ecosystem. So banks really have two choices, Steve. I mean, you can see this practically playing out in the market these days. Either on one side, they're embracing the technology and maturing themselves to the level of being in true BaaS or banking as a service player. On the other hand, you also see banks getting into a relationship of frenemies with the fintechs that are already nibbling away chunks of their business to enable these kind of services to their end customers.
Very good. Peter.
Look, it's a different, the embedding of payment, which is one of the most topical things we see and feel all around. As Bala said, we know it from buy now, pay later in our consumer lives, but really the depth of the change in in B2B space as well is hugely important. It's a difference in the operational model, but it's also a difference in the business model. In the operating model, it used to be you make a payment, you have to go to the bank, get in line, make a payment. It's the same thing. It's always been not customer centric. People go to the bank to do something, but the reality of today's everything, supply chain, API economy, you can't have an API economy and then leave your flow to go someplace to make a payment. So it's really a matter of embedding payments and embedding finance, which is related to payments. I think one of the longstanding, one of the greatest things that happened to banking was the establishment of lines of business like transaction banking or treasury services, something else. But it established a P&L for everybody to work in, and it became easier to manage and design. And this gets to the heart of the business model I was referring to. But also it becomes quite constraining. So I think one of the opportunities in payments and embedded payments and embedded finance is it goes beyond the silo of how this works in a bank. So it cannot be looked at as a silo from a banking point of view. Finance is a different department, perhaps. Payments is another department. Auto leasing is another department. But all the insights and all the embedding cuts across all industries. It's really a cross-industry play. And I think that's really interesting for banks and how they adjust their business models.
Very good, very good. One of the topics that we wanted to talk about today was the concept of contextuality. And before my question, maybe I'll just provide a brief definition, because the term is talked about, but maybe not necessarily well understood by all participants in the industry. And to do that, I'll quote one of my former colleagues who used to use an analogy to demonstrate contextuality by saying a shipping company receives a box. Bal is very familiar with this, to forward to the other side of the world. So the shipping company actually opens the box conceptually to know what's there, to determine the shipping approach to take. So, for instance, easily perishable contents take a different route, a different equipment than consumer electronics shipment, than materials for recycling. So with that example to define the term of contextuality, I'll start with Bala. How do you see contextuality in payments providing value, and what can payments providers do to enable contextuality to add value for their customers?
Yeah, first off, great analogy, Steve. I mean, that shipping company example is something I've always liked. I know what you're talking about. So let me take you to where this applies in the world of payments. I actually spoke about this at a previous Payments Canada Summit, so I'm going to kind of give you the short version now. The whole concept of contextual banking, which, by the way, we pioneered at Intellect a few years back, revolves around the theme of what happens when a bank really and truly pays attention to their customers, especially the interaction, the details of historical behavior and the journey, or in other words, the relevance of what the customer is trying to do vis-a-vis the service that is offered by the bank. And the question that always comes is, why do banks want to do it? So one side, payment modernization has opened up new possibilities and opportunities. Banks are clearly, I mentioned this earlier as well, the banks are clearly seeing that being a payment executor is not enough. So understanding client preferences and choices, and also remember tying it back to the working capital conversation we had, is very vital. Let's talk about ISO 222. So ISO is very, very interesting. It's got a wide array of metadata of remittance and invoice information that comes within every payment transaction. And that information that it carries opens up a wide range of possibilities of how bank can mine that information to figure out the payment behavior of the customers. You mentioned perishable and non-perishable in your shipping example, Steve. Similar situation is when you're trying to make a payment. What if I'm sending goods, even in the context of shipping? If I'm sending a perishable product and I know that it's not something returnable, what if I want my payment transaction to also be a revocable or a non-revocable transaction? So those are the kind of intelligent thinking that banks need to bring in. So in a way, the first step for banks to figure out that payment journey and making it contextual is to find out what makes it tick in the first place. And that's basically comes to about 4 questions. One is, who is initiating the payment? Where is the payment going? When does the payment need to be initiated or completed? And more importantly, why is the payment happening? And there are a lot of examples here. So let's take one scenario. I'm a customer trying to pay off an invoice. I just provide information like what is the amount, who am I paying it to, when do I want the payment to go, and I need my institution to come back and tell me what's the best way to make a payment. No? Do I want to make an EFT or wire? Or keep in mind that a best way can translate in different forms to different customers. So one customer, it may mean the cheapest way of making a payment. For another customer, it may be in the fastest way of making the payment. And they all have their pros and cons. So very interesting use case. Now, another example is, again, talking about metadata and ISO information. What if I'm not even making a payment right now, but I've got 5 payments to make in the next 1 week? And using the cash flow forecasting information, Peter, you spoke about cash flow forecasting. What if using cash flow information, I know that 1 week down the line, I'm not going to have enough money to pay those 5 invoices. So that's the intelligence that a bank can use to go back and say, you know what, hey, we see the situation coming up for you. We can help you. Do you want a working capital loan, or do you want to move money from somewhere else and make that payment? Or a completely different scenario could be you've got excess money coming in the next 3 days, and I recognize that in fact and see that you're going to have idle money. So what if you want to use that surplus cash and invest it in something that's going to give you a better return? So see how the beautiful part is that payments is that whole underlying backbone, as I mentioned earlier, but the use cases are phenomenal. Where you can bring in contextuality, bring in ISO data, and actually think smartly to bring out a lot of the cross-selling opportunities to the customers.
There's a lot of new technology around contextual, and I think it's a lot of, but to say that should not be driven by technology. Technology is an enabler. So I think it's a matter of understanding. And we talked the banking industry. I'm a banker. We've talked about customer centricity for a long time, but contextuality, the contextual situation of what's the underlying aspirations and processes and everything in the supply chain, for example, is super, super interesting for banks to be able to bring value to their clients and to help their clients. So the bank is not this distant thing where you just do something like a payment, but it's really an area that where the bank can really provide value-added services based upon the context. And it's that context is in the data, and a lot of technologies that can overlay that data to help bring things. But I think it's a matter from a product management point of view at a bank to think through what really they want to accomplish with this. And so it's not just, oh, let's apply technology and figure it out. So, for example, banks have been talking the industry has been talking for a long time about the convergence between the logistical supply chain and the financial supply chain. They're inextricably linked, but the real linkages have never come on. But ERP systems, logistical companies, the manufacturing side, they have a lot of context around inventory, stock, timing. As the world moves from just in time supply chains to just in case supply chains, nearshoring, onshoring, where the goods, and there's so many other value added services that banks can provide in banking terms. So financing, liquidity management, it doesn't have to be something radically different, but I think it's an evolution of the business model based upon the context of what's in the payments. And there are enormously powerful tools that banks can work with partners such as Intellect Design around what that could be. Intellect is very active in these areas in supply chain and trade finance, as well as obviously across all of the suite of liquidity management and other tools. So there's a lot that can be done, but it's a matter of thinking creatively around what clients are really trying to achieve and how the context of payments could really help them in that journey.
Absolutely. And if I may add a quick comment, Steve. So what Peter said about the whole array of possibilities when it comes to contextuality, I've noticed one thing that this whole aspect of taking on intelligence and building out contextuality can be, trust me, can be an extremely overwhelming process for a bank. So what we've always advised our clients to do is, it's all about the baby steps that you take towards that objective. So one of the very interesting approaches that we've seen one of our clients follow, pretty interesting format, is that they said, you know what, I want to build intelligence, yes, but I don't want to jump into the metaverse right away. But I want to use basic construct and basic rules to figure out what my client wants as a step one. Maybe just it doesn't even have to be AI or machine learning. Just put in a bunch of rules and say that this is how I want to recommend something to the customer. Then I get into, I think Peter also mentioned about ERP solutions. So getting in data and intelligence from bank systems, ERP solutions, accounting platforms to build a slight layer of intelligence, not necessarily cognitive, but just an if-then-else intelligence to take it to the next level, and then go into the smartness of your artificial intelligence and where we really want to get into that metaverse, right? So that's a progressive thinking that I think works very well for a lot of institutions.
Yeah, thanks for that, Bala, and that brings some of the. We had the final point in our title for this session was real world. So
exactly.
that brings us to a real world example of how contextuality can be applied to the business as a starting point. So moving on to the next topic that was in our list, in our summary of the session, virtual accounts, which are often called sub-accounts or sub-accounting, and Bala and I are smiling because we're colleagues and we tend to talk about them slightly differently. But in any event, whatever they are, virtual accounts or sub-accounts, they offer an interesting ability to change how payment flows work, and even change invoicing and reconciliation activities which tie to payments. So maybe starting with Bala, what are your views on virtual accounts as they relate to payments and as payments relate to virtual accounts? And to bring a real world aspect to this again, how can financial institutions apply virtual accounts and payments and generate value for themselves and for customers?
Sure. Well, Steve, you caught me on a topic that's my top favorite. So happy to start off on this. So sub-accounting strategies, in my own words, and I like to say that this is completely redefining the cash management and treasury services landscape. I always like to think of sub-accounting as a broader space than just corporate virtual accounts. Quite often, virtual accounts tend to be mistaken for a large corporate requirement, which is why sub-accounting becomes more all-encompassing. And broadly, what you will see is, Steve, is that there are broadly three key strategies that banks in North America are particularly adopting, especially more so in recent times. So strategy one is where they use sub-accounts to align to corporate accounting and reporting structures while maintaining a payments and collection ecosystem for internal and external parties that this corporate works with. So in this strategy, what the focus on one side is granular reporting for the corporate, which is one key driver. Banks are also working on very complex use cases where they integrate with multiple systems, accounting platforms, ERP solution used by the end customer. And more importantly, by leveraging real-time payment rail that are able to give instantaneous updates of pending invoice position by virtualizing their accounts segregated contextually by various parties. In fact, even contextualizing them by specific invoices represented as virtual sub-accounts. So this, as you can imagine, has a significant impact to enabling quicker and real-time visibility of cash positions. And we all know how critical that is, especially in recent times, for businesses to be on top of their operating cash positions. Now, strategy two in sub-accounting is where you revisit the genre of traditional liquidity management and provide alternative solutions for cash concentration and optimization, even in-house banking, for example. So here, while a large number of physical cash movement is being replaced by virtualized self-concentrating structures, what is also happening is corporate treasurers are gaining a lot more control on managing their intra-company cash position, and more importantly, optimizing payment settlement and even payment netting, for that matter, across various sub-entities like their subsidiaries, departments, etc. And then strategy 3 of sub-accounting, which is the most interesting one, I would say, is managing sub-accounting solutions as it relates to segregation of money held by corporates on behalf of their customers. It is, in other words, called as client money management, omnibus accounts, escrow account, trust accounts, etc. Here, the ability to orchestrate all the inbound and outbound money where third-party money on behalf of transactions are being conducted, especially more so while being compliant in a regulatory environment, provides a completely new dimension of payment processing in the context of client money management, which is very super specialized and creating a wide opportunity for banks to increase the deposit base and transform their cash management services significantly. And I can go on and on, but I know we are limited on time. But that's just a very, very, very exciting space where the world of payment, the mechanism of how payments get orchestrated in a sub-accounting world is completely taking the market best down.
Yeah, one just with the notion of real world in mind, just before I get to Peter, maybe I just ask you to expand a little bit on how virtual accounts or sub accounts can be used for payments in terms of, addressability.
Oh yeah.
At a very summary level, a messaging flow even might be in a typical
Okay.
institution, or what those options are. Just briefly to
Yeah, sure. So I gave you this example of sub-accounting at an invoice level. That's probably a great example to explain this addressability, right? So think of it this way. So think of it as you got a corporate who receives payment from a bunch of let's say customers or counterparties that we work with, right? In fact, we had somebody we were working with who had an example. So they had a shipping corporation in mainland China was shipping goods to the mainland United States, and that corporation had an office in the West Coast distributing these goods to a variety of retailers in the US. So every retailer had to have a certain balance, or there's an amount of settlement that happened between this manufacturer and those accounts. The beauty of this is that every time this retailer purchases something from the distributor, they would actually raise an invoice on their ERP application. Now, every invoice would become an addressable component under the virtual account that is represented for that distributor. Remember, this is not an account itself; it is just a virtualized number. And the beauty of this is when that distributor makes the payment, right? He makes the payment directly to that contextualized virtual account number, which directly represents that invoice itself, which means that every invoice has a life of its own. And the beauty of it is you go to a real-time payment system, initiate a payment from any XYZ bank, it directly hits that invoice on the application and instantaneously reflects the position on your ERP application through a direct integration on an API. The beauty of this is what used to take probably 2 to 2.5 days to settle and figure out what your DSO is or direct sales outstanding is, it's now literally instantaneous. Yeah, and I mean, what more can corporations ask for, right? That kind of cash visibility.
Yeah, I guess the one key thing is that in Canadian terms, each one of those virtual accounts tied to a specific invoice has a transit number associated with it.
Yeah. Exactly. So that recognizability, see you brought up a great point. So that recognizable aspect of that number is where the beauty lies. And the second thing, and I have to call this out, Steve, because this is coming up every other day when I talk about sub-accounting and payments in the market, is that the sub-accounting application should not have payment processing built into it. We see this happening all the time in the market. And banks don't realize what a huge pain that is, because if you're going to build payment processing inside your virtual or sub-accounting application, and if you've got a change that happens in the payment processing, and that's happening every other day in Canada, right? I mean, you're seeing new messages, new payment trails. So if you've got to make a change like that, you've got to change your complete payment application and also change your entire sub-accounting system. So what's very important for banks to realize is that you've got to keep your sub-accounting system completely agnostic of the payment processing, but it should orchestrate beautifully with your payment system. So that's the real life, I would say, challenge that every bank should take on themselves.
Very good, thanks, Peter. I know the very first time you and I met, it was very clear to me you were a big advocate for virtual accounts. Maybe you could add to Bala's comment.
In fact, I absolutely share Bala's passion about this, and it's always struck me. I don't know why virtual accounting capabilities, sub-accounting, call it what you want, is not much bigger in banking, particularly in something like the transaction banking world. It is so flexible and it's very composable. It's even composable at the corporate side, the company side that uses it can have a role in designing and building on it. But the point is, if you look at traditional banking challenges, time to market, for example, everything takes a year to make a decision, then it goes through a budget cycle of a half a year, and then you're lucky if you get code by the end of next year. So everything takes a long time, generally in banking, the model of banking that has existed in many of our lives. Of course, in today's very fast-paced world, one needs something that's quite flexible, and something like the whole, call it sub-accounting package, whatever it is, it's got that capability for a product manager or the client to really think about, okay, well, how could this be applied? There's some obvious use cases. The reconciliation is a very, very powerful one, but it goes well beyond that. This could be liquidity management of a form in terms of an in-house bank at the corporate client, how they do it. That's just another use case. It could also, by extension, be used because it's segregated client money to also afford, for example, maybe an insurance company to be able to offer something to their clients based upon an iceberg account where the money is kept that's allocated and segregated money. It's so flexible. It always surprises me that it's not much bigger in the industry. It's something definitely to take a look at in the modern world as banks reinvent the kinds of capabilities and models that they can offer to clients.
And Steve, since you mentioned embedded earlier, so embedded banking in the context of sub-accounting and payment processing, I mean, that's a limitless opportunity there. So.
Yeah. Well, I will follow up on your comments, Peter, about why hasn't it caught on. And I will say that, and I think this is Bala's experience as well, certainly here in Canada, a little over 2 years ago, all of a sudden we as a provider of virtual accounting capabilities saw a surge of interest, which then ran into the COVID wall. And I think all of those kind of projects that those parts of the banks were thinking about, in addition to what was going on in payment mod, got put on hold because the emphasis was around getting loan money out the door for COVID, ensuring even better digital capabilities for remote sales and servicing. But now we have noticed that just more recently that interest has come back as we're hoping we're coming out of the COVID situation. So the final question that I had here is around the cloud. So we're clearly seeing more financial services firms move activity workloads to the cloud. And I'll start with Peter here. Do you think payments and the associated working capital management services on the cloud is a viable and sensible option for financial services? And if so, how do you think those financial institutions can leverage the capabilities offered by the cloud in the payments and working capital management space?
Well, so mine is a global role, not just Canada, so I'm exposed to a lot of the trends globally. In a lot of respects, having lived the last 5 years through the cloud adoption into the maturity model of how it gets applied, and I come from the business side, not from the technology side, but I think it's really all about how things get used. So my observations are a couple. First of all, the cloud is not just a data center in the sky conceptually. It's really a set of many different tools and capabilities, but it brings a lot of core things to banks. For one thing, banks are now competing with fintechs who are all cloud native, born in the cloud. Whereas banks, it's a journey to go from the on-prem into the cloud. The cloud being modern technology is also highly secure. It's designed in a very different way than legacy systems. So there's a whole security element around data privacy controls, all those kinds of things. And actually, those are the first conversations we have with banks because those are the initial hurdles to come over. But I do think one of the big lessons of COVID, frankly, and now Ukraine, is that agility. The future of the world is not predictable. So one needs to be in a platform that's highly agile. That brings a lot of things with it, cost savings, because if things go more quickly, if one is more agile, one is not stuck into long waterfall projects in IT that suck all the oxygen out, that are very expensive. So there's some hidden benefits. It's not just that the technology is less expensive, a virtual server that's got a very elastic compared to an on-prem server. I don't think it's so much about that. I think it's about the agility, and that agility is obviously a lower cost base, but it gives the ability for product managers to build things for clients as the need arrives. Nobody predicted COVID, of course, and actually the trend to the cloud predated COVID. It's not like eureka, e-commerce is everywhere, we need the cloud suddenly. The fundamental trends of the changes in the market and cloud adoption to change the business model and make them more ubiquitous and go through all the things we talked about, embedded finance, embedded payments, all these kinds of things. The cloud technology is a core root in how that gets done. And all the banks now are moving mission critical, are moving all kinds of things to the cloud. That's an ongoing process. Obviously, Microsoft is highly engaged in that with partners and and the banks, and so it is the journey is very much ongoing.
Yeah, thanks for that, Peter. Bala, what thoughts would you like to add there?
I think it's a clear writing on the wall, Steve. So in the last, I would say, 2 to 3 years of all the interaction that we have had in the US and Canada, we've hardly come up with the on-prem requirements anymore from our client institutions. It's simply on one side, it's a no-brainer. It's from a cost perspective, from a technology landscape perspective, talk about it from your OCD control perspective as well. So it's a no-brainer, right? So that's for the banks, and like Peter said, the product managers and the technology architects at the bank, it's a no-brainer for them. For us, for people like us, being the solution providers, I think what we see as very important is our readiness to be able to cater to that landscape in a very dynamic and an agile form, which basically means that all of the use cases and the real life examples we spoke about until now on payments, right? Ability to expose all of these experiences in a way that is consumable, make them call it API first, for the lack of a better term, or completely cloud native from day zero. Those are elements of readiness that we see as our responsibility when we bring this ecosystem to that level of maturity to be able to help all these institutions to get into that next stage of readiness from a technology perspective. So, and then working with partners like Microsoft obviously, gives us that edge to take a convincing and a joint proposition to the market in a cost-effective and a highly productive way. So that's something that we've always been focused on.
Yeah, thanks, Val. I'll add my own view here because just in the last year and a half, in my own role at Intellect, I now have clients implementing digital front ends, bank treasury applications, and even our payment hub in the cloud and in the public cloud. And for those who maybe aren't fully familiar with that terminology, that means anything in Azure or GAS, Peter, AWS, or Google, right? That's public cloud. So institutions are more open to this kind of thing. And, the other thing I've also learned is, in general terms, banks and other players may be very proud of their security and resiliency capabilities, proud of their disaster recovery capabilities. But in all honesty, a public cloud provider with multiple regions in Canada and with multiple availability zones in those regions and tooling to enhance the availability, a private organization, even our largest banks, are pretty hard pressed to say that they can do something better than one of those providers.
It's a scale game
around the globe, right? And even now, and I obviously can't get into details, but I'm pursuing several opportunities that are surprising me almost at how keen the financial institution or other financial market players are to put things in the cloud or to have that public cloud option as a really serious alternative. And to me, that's as real world as it gets. What are organizations actually doing? So that's kind of the end of the specific topics we had. We do have a couple of questions in the chat. So the first one is from Joe, who asks a question about embedded finance. And he says, with open banking well underway, can the panel comment on a few key challenges banks are facing in adopting embedded finance? And the second part, if you can keep all this straight, with the open economy on the horizon. So any thoughts on that, embedded finance, open banking, open economy intersection? Bala's smiling more broadly.
So when PSD2 came in Europe, I was one of the most excited people, thinking that eventually it's going to come to the Americas. We're still waiting for it. We're still waiting for an equivalent of PSD2 in North America. I have a feeling Canada will probably go ahead of the United States. There's a good possibility, but embedded finance, I see that as a stepping stone towards that. But keep in mind that with all the ecosystem and the great opportunities that embedded finance brings in, it's not still going to be for fully regulated environment for us, unlike PSD2 in Europe. So it's going to be some time before it stabilizes from a security standpoint, from a regulation standpoint. Getting some order into that whole business is going to take a while, but that does not stop the various players in the market from going out there and building out these shared ecosystems. That's already happening, by the way. So it's already a lot of examples out there. So Peter, you'll have your points of view there, but I think from a challenge perspective, it's just that banks need to be a little aware of the fact that there is going to be a regulation that will circle this topic very soon. Hopefully not too late, but when it does happen, there'll be a need to bring in a lot of control into the way in which these shared ecosystems work. I think of all the possible challenges, I would say that's in my mind going to be the topmost. Being an opportunity provider yet considerably regulated will be where the challenge lies.
Yeah, thanks for that, Bala. Peter.
There's a lot of priorities in banking of things that have to get done. This represents a new model, and there are those that see tremendous opportunity here, and those that see, we should focus on what we really do need to get done. And so, and that's certainly following the evolution of PSD2. The banks were, okay, so what's the role and responsibility? How's this really going to work? I've got so many other things, blah, blah. So there are all kinds of reasons why not to embrace a new model. But there are risks in the new model, and there's business risks, there's real risks around liabilities, who's responsible. There's so many different issues. So I think it's a matter of working through the product management function to work through what these are and to think more broadly, because these trends that are out there in markets like open banking are really progressing, and it's a completely different service approach, product approach, and it's just a matter of, the only advice I would say is don't think about it in an insular way. It's really a cross-industry issue, and one has to think broadly about the impact for the bank and the opportunity for the bank, not just in my particular P&L.
Yeah. Thanks for that, Peter. One other question before we wrap up. Both of you, in your earlier comments, made reference to ISO data. Peter, you made reference to the fact that, hey, it's not just a compliance thing. It does create some opportunity. But certainly in my experience, many payments players are still really grappling with the idea of what are some real value-added use cases that can generate opportunity for a bank and value for clients. So maybe just briefly, what are each of your thoughts on a couple of the highest value use cases that you think might be out there that, again, meet those two tests, value for FI, value for client? Peter, you want to take
So look, reconciliation is a good one, but for me, reconciliation is very 1980s. It was an issue back then. So I don't think that that's where the industry is moving to. I think that creative work has to go into what that is. I think it has also to do, those insights and the value in those insights can really be applied. I think in banking, look, we've got an entire industry in fintechs and payments around data insights. That's what the new model is all about. And here banks have this fantastic new structure with structured payment messaging with a lot of data inside from which a lot of value can be derived, not just to sell data as in a MT950 report or something, but it's really about the changing role of a bank and how can they help the company. Because also companies have a lot of people doing a lot of stuff that they'd rather not be doing because it's not core to them. Maybe it's an opportunity for banks to do more of those kinds of things that a corporate treasurer would do, for example, just throwing out some ideas. So I think it has to get beyond, certainly compliance is not a bad thing to get a tick in the box to get funding, but it's just not the right place to be focusing. It's really on the use cases, and that's a creative process that has to be gone through.
Thanks, Peter. We're just about at time, Bala. I'd ask you for.
I'll try to keep it short. See, what really is happening with ISO? The ISO is giving you the ability to separate out remittance information from payments information. So more importantly, when we keep saying data, it's all about the whole aspect of this remittance information, payments information being separate, and leveraging the data from the remittance information to offer working capital solutions, like I said, shortfall scenarios, or use cash flow forecasting to figure out what kind of facilities are to be provided, enable payables, receivables, reconciliation requirements, supply chain insights that are available. So there's quite a few areas. So ISO as an enabler is really creating this whole framework where the ability to tap that information and use it for a bunch of smart use cases, and there are a variety of them. I know we are running out of time, but then there are a variety of those use cases where you can tap that data for a variety of these problems to solve for. Like I said, working capital, receivable, payable, reconciliation, a whole bunch of cash flow forecasting, and a whole bunch of these scenarios that you can typically apply it to.
Great. Well, listen, Peter and Bala, thank you. Just to sort of sum up, we titled this Patterns in Payment, and had, we've identified a number of patterns, which is kind of a design thinking term that we've seen. How to use payments and how they interact with better working capital management, embedded payments, the concept of and practice around contextuality, virtual accounts, moving to the cloud, and here in the bonus round, open banking and ISO. So again, thanks both of you very much. For everyone who's been listening in, just to let you know, the recordings will be available on the Payments Canada website to be viewed for several months. And then I understand from Payments Canada that the sessions will ultimately be publicly available on YouTube. So the comments and the insights will live forever, Peter, on the cloud. Thanks all very much, and I hope you've enjoyed the conference, and you have a great rest of the week, everyone. Bye-bye.
Thank you.
Thank you.